Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it is relied upon as any form of advice. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of it is relied upon as any form of advice at all. It's just general in nature only. Well, we are now coming down to a point where you just cannot get past the data, and it is incredibly loud, and it's starting to actually change the dialogue. I have been pretty bullish on the US dollar for a while, and that has coming through to fruition, and it's also coming through to roost. I really want to highlight the Aussie US. The reason for it, it's now at a 2021 low, something we identified about 4 to 5 weeks ago, that despite all of the good news on the Aussie side, it just couldn't get through 78 cents. And now we've got to 74.60, and it's still under pressure and going lower. And that is because it's not about just the risk inside the Aussie, it's more about the fact that there is just economic optimism going on in the US, and you can't, fault that. Even with non-farm payrolls, which are good, probably not as high as they wanted, but remember, they wanted to average 200,000 jobs a month before COVID. They're now averaging around about 550 in the recovery phase of the COVID crisis. ADP numbers were fantastic. If you have a look at that 692 they saw last week, that 624,000 of them were in services. It's a service economy, very, very strong. ISM manufacturing, although it slipped ever so slightly to 60.2, it's still in the records, top 10 best that it's had in the last 10 years. More importantly, prices paid, aka inflation, is at 90 and a bit. It's a record for that level, and that is astounding in terms of what's going on. Yes, there is some transitory into it, but you cannot argue now that the statutory nature of it is getting stronger, and therefore the structural part of it is getting even stronger. And that is where you want to start looking. The data is now becoming more than loud. It is right out there showing very clearly that FOMC members are under pressure. And I think you need to start with somebody like Patrick Hunter, who is the Philly Fed president. He was incredibly strong in his comments and carries a huge amount of weight in terms of what he said, that he believes quantitative easing should be started this year and started pretty quickly. He said on rates, although he was still believing it shouldn't change, the data keeps going the way it is, he thinks it should. In fact, next year, it could mean that you actually see rate rises. This is a big US dollar push, and it really will be something to watch because the data is just getting stronger and stronger and stronger. Something, again, we talked about and forecasted for the second quarter of this year, and it's not slowing down. As they get more and more vaccinations into the arms of Americans, it is going to mean that reopening gets faster as well. And that is all more not just around, as I said, the risk currencies. It's more around the economic growth in the US is going to continue to accelerate. And there is no doubt that people want to be exposed to that because the US recovery has been fantastic even before we got to this stage. And that's why at the moment anyway, I'm still really quite strong on where the US dollar is going.